following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go? The S&P's off 8 points. What are we going to say? Got back about 3/8 of the downside. We went to a low of 1948 on the S&P cash. We're off a little bit. Probably the biggest thing of note is the total lack of volume. We've been doing 2.2 billion shares at the start of the show, 1.74 billion shares on the New York Consolidated Tape. I don't know how you can read that anything other than a dramatic loss of volume. 500 million shares light at 2 p.m. Eastern time is nothing but light. Does that mean we're going to go higher before the end of the day? I don't think so, but we've had this kind of trend pretty much, and I think I know the reason. That is that we get a lot of deleveraging going on in China and in Europe. They sell either right off in the morning or fairly soon in the morning, and 11 o'clock in Europe, that pretty much sets the low of the day. And then the cash that's coming over here buys stocks over here. So we've got the people that need the cash in the morning, the people that have the cash in the afternoon. And so far, we've always seen the market kind of go up a little bit into the close, as we did on Friday. But I'm looking at a great deal of stocks out here, and there's a handful of them that are down on volume. But a tremendous amount of them that are down on very light volume. And so if you are a fan of price and volume trading, you have to say that we are down on light volume. I would say on 90% of the stocks. I haven't gone through and done a survey today, but I bet it's got to be something like that. There's a handful of stocks, and we're going to talk about them today, that are weaker and why they are. But mostly it is somewhat around news and not any fundamental reason. So we can take a look at that. We're off a little bit on things like the IBB, off 1%, but it's 550,000 shares on the IBB. That's not telling me I should sell the farm and run away to the mountains and become a hoarder. It's not a hoarder. What else is they? A prepper. That's what they are. I got to keep up on my Discovery Channel shows out here, so I know what to be: a prepper or a hoarder, or a prepper hoarder. Maybe those two shows should go in together. Anyway, it's kind of like that horrible play that I was forced to sit through as a kid. I think it was called Waiting for Godot. And of course, the rat, I can't even say it. I was so mad because, of course, he never. Here is a big spoiler: Godot never shows up. Anyway, don't wait for him. And if you can avoid it, apparently it's one of those New York hoity-toity kind of plays. I don't think it was that exciting. Anyway, as we continue to move along with the show and get started, I think we've done everything. We talked about the major index that counts, the S&P 500. We talked about the levels. We've talked about the lack of volume. And now you know what it's time to talk about.
And it's all just a little bit of history repeating.
On this day in 1901, here's another spoiler alert. 1901. On this day in 1901, U.S. President William McKinley, who was unceremoniously stripped of his mountain title last week, dies after being shot by a deranged arcanist. During the Pan American explosion in Buffalo, New York. McKinley defeated his Democratic rival, of course, to get into office, William Jennings Bryan, and beat him like a redheaded stepchild by the largest popular margin since the end of the Civil War. And I think the only guy to get beaten worse was, who'd Nixon run against in 1972? I can't even remember. I think it's the same kind of thing, absolute blowout. But I don't know. Did it take till Kennedy to where they really started taking security for the president seriously? I have a feeling that was it. On that day, finally, they didn't. But we've had a bunch of presidents that they've tried to kill or do something bad to. He was just in a long line of them. But anyway, I think he lasted a couple of days, didn't he, before he died? I think this actually happened a few days earlier. But I guess I need to brush up on my history. But other than that, not a lot happening, and certainly not a lot happening in the business market on this day. But one more assassination, and maybe the security is good enough that we can look at that chapter of our history in the rear view mirror. Of course, the big news and some of the reason why we're seeing, I suspect, some money flowing out of Europe is that the anti-austerity super left-wing Communist Party part of the Labour Party won in a landslide. And it's hard to say anything other than Britain is making the mistakes that they made in the past. But I guess reality is so far divorced from what's going on over there that no one can figure it out. They've really bought into that Eastern European socialism. And I suspect that why this does not change a great deal of the foreign policy at the moment for Britain, I suspect that they won enough seats, at least from what I've read, that will change the fiscal policy of them. And other than the euro, which is what, 56% of the dollar index, it's hard for me to figure out that any of this ends up having a stronger pound, but a weaker pound, and of course, feeding right back into a stronger dollar. Not a lot of movement today so far, but again, it's probably going to take, 15, 30 days. They got to form governments and oppositions, and my word, it's one of those messy government things that no one can ever figure out if you don't live there, apparently. But it's going to take a little while to come on. But between that and Australia, of course, Australia also had big elections over the weekend, and they had an extremely far left government before, and everybody's bought into the whole global warming thing down in Australia. And then they started seeing their electric bills go from the equivalent of about $200 a month on average in the United States for Australian dollars to about $450 to pay for all that kind of ridiculous nonsense. And of course, she was out on her rear end. This isn't the end of how governments are going to change, especially the commodities business, but also the dollar and the strength of the dollar if we're trading at least U.S. companies. And, of course, also the price of commodities all over the world. Probably going to normally see these things start to really gain strength, not the day that these things happen, but in the weeks and months going forward. Just know that the governments at least took a far left turn in England and the UK, and about halfway back in Australia. And, of course, Australia really built on the whole thing with China's commodity expo. And we're going to talk about the numbers in China. I had somebody email me about that, too, but it is going to be far that. Anyway, other news out here I thought was rather interesting. Dodd-Frank has been slow to actually come in and be, how can I say that, be fully implemented, probably the best way to say it. But over the next coming weeks, literally everything that anybody does at one of the bigger brokerages will be recorded. These new rules that I guess will be totally implemented later this week have been going into effect, of course, in recent months. They require that the firms must keep the recordings for 1 year. And they've actually got and have companies that are built in taking all this and turning it into text so it's searchable. But with some of the things that you cannot say without getting an audit of what you're doing out here is call me on my cell phone. Such as call me on my cell phone, anything that you can do, meet me in the bathroom. There's a whole bunch of list of things that will happen now if you're in these big halls of finance that will automatically trigger a look into what you're doing, which, I mean, it's got to be rather big brotherish. I visited a gentleman I was doing some work for in, I'm going to say 2007 or 2006, that worked at a major firm. And that we were talking about maybe writing a piece of software to do something he was interested in. And literally anytime he wanted to talk about anything, they were already being recorded. He said, I think I got to go to the bathroom again. I got a kidney infection. And he didn't have anything of this sort. All he wanted to do was go somewhere where it wasn't being recorded. But kind of interesting, and I suspect that we're going to see a lot more of this, and probably a lot of trading going in and on in the bathrooms of these big firms, where, of course, hopefully they're not bugged. And I actually have a little thing out here. It is a bittersweet symphony, but it's bittersweet for Bloomberg and not for Symphony. The Financial Times reported that Symphony, which is a big push by, of course, the rival, or now the rival, to Bloomberg, and that is Goldman Sachs. Bloomberg, if you remember, everybody found out that the reporters were busy looking into what everybody was doing at Goldman Sachs, and they didn't quite like it, so they started their own company, and they've got Thomson Reuters providing data, and are going to go head-to-head with Bloomberg. And I don't know if Bloomberg is going to be able to keep that kind of level of margins that they've been having forever, like $25,000 to $35,000 terminals per year. I know that price is probably a little bit lower for someone like Goldman Sachs, but not a lot of competition in that business. Anyway, it is going to be called Symphony, and it's pushed by a lot of the trading floors, but it also has a component where a lot of these bigwigs can type to each other, instant messaging that goes away. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, going to be very interesting to see. Bloomberg has driven the financial markets for a very long time. Thomson Reuters seems to be pretty good on it, maybe not as fast as Bloomberg. Maybe if margins start to dip at Bloomberg, maybe it will not be able to afford to be the preeminent and $35,000 a year per seat financial terminal for the bigot guys out there. But just interesting. I had an email from one of my subscribers, and I said I'd answer this during the show. And it was a question about how and why the market was potentially, but not for sure, reacting to numbers overnight from China. And I think there's two things. I talked about it, I think, in early summer. But first of all these numbers in China are made up. No matter what you hear, if it's the GDP number, everything else. And how do we know this? We know this from WikiLeaks. Of course, they dumped a bunch of cables out, and the economist that now runs the show over there in 2007 is now China's prime minister. But at that time, he already told several of the U.S. delegation there that they just made the thing up. There's nothing new in it. And, of course, the people went to the embassy and cabled that back. And now we know that there isn't any difference And of course, from what we can tell lately, there still isn't any difference. But what I will say is about this, and that is I suspect that they were a lot worse off than they said 2 months ago before everything started coming down. At this point, they are doing it not what they're saying they're doing the opposite. And if we look at the prices for shipping and hauling oil, it has in 6 months gone from about $70,000 a day for they ship down to about $20,000 for the ship, except this morning, which over the weekend saw a blip. That blip came from China buying huge amounts of oil. And my guess is that they already bought it. But what happened is that while they were quietly buying it, they've been trying to slowly buy up the spare amount of shipping so they can ship it to their country and start filling any of their strategic oil wells. So if you were a true conspiracist, you would say that they're preparing for war. I would say that more likely they are starting to buy commodities when they are on sale, which they've done in the past. And so if I see them on the same day that they say all their numbers are bad, out trying to get as many big ships as they can to haul crude their way, I think they think that at least fairly close to the lows are in. Of course, we see that silver was down about 1% today. Gold up about 0.4%. And we're going to talk more about gold today. But it will be what you think. Anyway, it is a mad market. And the first thing that we want to get to, of course, are charts. Now, I've seen a lot of these charts. We started talking about this on Friday. I wanted to see if anything truly happened. Like we bounce off. You know, volume was a little light in some of these stocks like AEM. And I think we brought this one up. It has not pierced the low. Still needs to get to $21 for the August 6th low. What I dislike, and I think we talked about this before, was the energy on the way down was more than the energy on the way back up from the August 6th low to the August 20th high back down to this low. You had some very strong down days. And that, of course, really even sets up some confluence levels that are not that much higher. So could we get a bounce out of this? Yes. Could it break those confluence levels? The answer is yes, too. The problem is that it's not going to be an easy ride to the upside. You have a lot of overhead resistance in some of these. If we go look at GG, which is a gold corp, similar pattern. This one I like a little better because it did pierce the low. July 24th. $12.35, 21 million shares. Got into it with 12 million shares on Friday. Bounced today, rather tepid and on light volume to 6.9 million shares so far today. So we'll continue to look at these gold stocks. But a couple things, and that is that they just, let's see if we can do it. This one, you know, they're not all acting homogeneous. I guess that would be the biggest thing out here. They are tending to act very different. And it would be nice if all of them were telling us that gold is going up and not just a few of them are going to have better results than others. Anyway, we'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And you can call me at 877-927-6648. You can post a message in the den, or you can email me at path@tfnn.com. Anyway, we're looking at Gold Corp, and it has made a successful bottom. As we said, some of these stocks actually are seeing the energy pull back a little bit. Gold Corp, a little stronger than some, but we'll have to take a look at them. What is interesting to me out here are some of the stocks that should have hit. This is one of in my newsletter. I was wondering if this is going to actually make and fill this gap at about 46 bucks. This is Western Refining, WNR. Had very light volume, or at least declining volume over the last 3 days as it got back into this heavy day of volume, but actually pretty much matched the 1.7 million shares 3 trading days ago to the 21st that had 2.3 million shares. So, you know, you had some strong volume down. You had some strong 2.4 million shares down, but couldn't do a lot other than that. Okay, what else do we have? Tech data. A lot of tech news coming out over the next few days. One of the things, of course, is going to be everybody this week will be at Dreamforce. That's the Salesforce thing. We're going to probably see a lot of bank shots out of technology over the next couple of days, probably overshadowed by Janet Yellen and the Fed on Thursday. But I suspect that if you get some good news out of these and the market goes higher after the announcement on Thursday, you're probably going to see a lot of these stocks that are getting a lot of attention this week for Salesforce being a driving issue, at least the news being a driving issue. This one I've been watching because, of course, they sell a lot of computer parts and paraphernalia, peripherals also. And this has been at these highs, 2.2 million shares on August 20th, where this thing popped up. It's been hovering around a little doji out here today, again on light volume. So I'll be watching this one over the next day or two. And do I have it? Oh, boy, I didn't have it. I wanted to play the Love Boat theme. Yeah, I'll do it another day. Royal Caribbean is another one of these stocks that is at highs. This one's at highs with a light volume. August 10th, we saw $92.68 with 3 million shares. We've got about 1.14 million shares at the moment. So we're going to come in probably 50% light, maybe 45% light. There's a lot of volume by the end of the day. So volume is light on both the upside and the downside of a lot of these stocks. Let me go back to some of the other stuff I was looking at. Oh, you got Love Boat.
Exciting and new.
Where's Captain Stubing? We need him for the Royal Caribbean. Anyway, thank you, engineer at large. Anyway, Royal Caribbean. You know, the energy on this last leg up was better than the last leg down. I don't know, going into fall. I mean, these generally tend to be fairly weak coming out of February, and probably going to see that again. But it's kind of hard for me to short these stocks going into a winter, especially I know after the last couple of winters have been so brutal. My guess is a lot of people are going to be signing up for cruises early this season to get out. And I don't know what else I can say about that. PLL Corporation. There are a few stocks out here that are testing lows on lighter volume. Energy was about the same up and down on this particular stock. I do like the fact that it did go back and test the July 1st low, $29.32, 5.5 million shares. Got into it on Friday, 3.7 million shares is back in the trading range, and a great deal of these stocks are. The downside to this one is you $2 higher, you get into immensely heavy resistance on these down days like the 24th of August, where you had almost 8 million shares to the 2.4, 2.5 that you're already up today. What else do we have? Okay. Huntsman Corporation, another one out here testing lows now. This one a lot better. Gives us an idea about what's going on, mostly because it had a 7 million share low, and that was $15.02 back on the 24th. It's come back and tested it. On Friday, we got 1.7 million shares today, 920,000 shares. Now, energy about same up on this last leg from August 24th to that $16. 83-cent high from August 28th. Took a little time to come back down here, but a lot of these stocks look like maybe they're starting to get washed out. This company, together with its subsidiaries, manufactures and sells differentiated organic and inorganic chemical products worldwide. Polyurethane, paint products, text, everything that you think that would be not sold during an economic pullback. You know, maybe we've got some little thing going on here, and maybe it could get started with just China starting to buy commodities thinking that they are close or fairly close to the lows. Got requests to sing the Love Boat. Maybe I'll spend the last 5 minutes of this show actually doing that. But we'll see. Question about Microsoft, what's going on with it? They did have some news breaking just before the beginning of the show. This is a lot of these stocks probably made, if you are firmly in the bear camp, probably made the B, the C point and an ABC down. But Microsoft coming out with news just before we came on, announcing that they will be releasing their new products for at least the laptop market with a Surface Pro. Doesn't seem to be making a lot of difference out here. But one thing you can say is this has been going sideways for the most part since the 27th. And volume today at 12.5 million shares is ridiculously low at the moment. What else do we have? I had a whole bunch of lists on stocks I wanted to get to. Let me get them here. First of all was Apple. I had some email about Apple during the break. If you didn't catch my discussion with Tom O'Brien on Friday, I think that they've got at least a financial engineering way of making their books look good for a while. And we talked about that in the 4 o'clock hour on a show on Friday. But by them signing up a way to get a new iPhone every single year, could really do well for them. And of course, they're going to sell those other iPhones after they've been out a year as used to probably third world countries. But to me, the idea of being able to add Apple Care and insurance and stuff made the deal even better than the carriers, most of which have abandoned Apple and said, okay, we're going to add the cost of the phone as a separate line item coming out. But what Apple's done is set itself up with a lot of folks that deal in consumer credit, and they're going to be doing this themselves. And by doing it themselves, they will continue to probably make a little bit better margins. But also, since they can sell those leases off, they don't have any chargebacks coming at them as they would with the carriers. And that is probably a big deal financially for them. Their books should look better. Now, they popped a little higher this morning on news of, quote, quote, China doing better. I have an idea that that's a lot of hooey. I think what probably Apple and a lot of the Apple heads on Wall Street don't want to talk about is just straight financial engineering, share buybacks, changes to their programs so they can lease people new phones. There may be something to the fact that people will buy phones every single year now to get the latest version, but kind of tough to actually figure that out if that's true or not. I think that just the bookkeeping angle is much better. And of course, we already know that at least all the carriers thought it was going to be better because they did it looking at the benefits of being able to write those leases off sooner and take the cash now to support their balance sheets. And I suspect that Apple is doing literally the same thing as the carriers. They're just going to be able to do a better job because, of course, they build the thing and don't have to pay the markup to themselves or the shipping to themselves. All they have to do is send an iPhone to the customer, and that's pretty much it. So that would be it. What else do we have going on? So I got that one done. Question about Baidu, of course, and Alibaba. If you missed this, Barron's had a cover story, and it's commonly called the hit piece, which is a front page cover story saying that everything is going to hell in a handbasket for a particular company over the weekend. This is down. Now, it could have been a lot worse. The question is, how does it and how will it handle this low, which is the $58 low from August 24th? We got into that candle fairly significantly on the 8th with 50 million shares. So you know that $58 level is going to get pretty much tested if there's any supply and demand left in the market. But I continue to think we've got a move out here that could come in with at least a temporary low at that $58 level. I told you why I would never buy the Chinese companies to begin with. Of course, I said that when this thing came out, when it was 120 bucks, when it was 80 bucks, when it's 60 bucks, I would never buy this stock. And I've told you ad nauseum why. That is that you're not even buying a stock, you're not buying an equity, you're buying a holding company of something else, and you basically one day are going to see the Chinese say that you own nothing. And I will not be surprised or cry for you because I have told you thusly. Right? Did I tell you thusly? I informed you thusly.
I informed you thusly.
Yes, I did. I informed you thusly. There we go. Anyway, Alibaba's one. Baidu, take a quick look at it as it's the other one that looks like it's having some issues. Could a lot of these Chinese stocks come back and test their lows? I think they could. Probably not enough of them now to really affect the market as they could 6 months ago when they were the original IPOs. But a lot of sideways action for Baidu. I think we'll zoom in just a little closer. To me, getting a hit piece on Alibaba and or Baidu and all the noise around it would make me think that this thing is probably getting ready for some kind of short squeeze temporarily. So what else do we have going on out here? Marvel, keep your hands off this one. They have some accounting, probably fraud, if not just horrible accounting. Of course, this hammered down on Friday. More color on it today from the accounting committee from the company. And that pretty much is telling me one thing, and that is that we have real problems in this one. I would not be surprised to see this going down to $5 fairly quickly. So just hands off until all the accounting issues have been handled. What else do we have out here? Let me get a few things cleaned up on my desktop here, and then we can go back to some of the other stuff. Okay. Let's see if there's anything moving. Okay, DCM was off about 7%. This is the telecoms in Japan, and Mr. Abe said that mobile phone bills should be reduced. And I suspect this is going to put a hurt in some of the businesses that are over, at least in the Pacific Rim. And for the most part, I don't think that there's a lot of exposure here in the United States, but my guess is that the bank shot will be, and people will see those going down over there, and will probably think that these are going down over here also. In biotech, ALX, let's see, was it ALXN? It's down about 4%. Not a huge deal, but a lot of these companies need to come back and retest these lows. So far, the volume looks fairly decent for a test of Alexion Pharmaceuticals low of August 24th. It need 156.71 to test the absolute low of that day. On 3.5 million shares, we have 1.3 million shares today as we are back into that candle. I think that tells you a great deal. There isn't a lot of volume in a lot of these stocks. Anyway, as we go to break, we're off 9 points on the S&P cash. Still haven't done 2 billion shares. I think that tells you everything you need to know about the volume. It does not exist. It is vapor. It is light.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, and had a request to play It's the End of the World, and I feel fine. But I have a better one out here today, and I think you'll like this one.
The world outside is hanging on by a very thin, non-GMO, cruelty-free organic hemp thread.
I saw that in the Quiznos ad this weekend, making fun of Burning Man. And I couldn't laugh long enough at seeing all the people who just think they're cool. Eventually, all these things turn into the thing that people think they're cool. The cool people have long since quit going to these things. Silver Wheaton out here was testing its lows and has today. It's not closing back over it. It did get a downgrade to market perform by BMO. I don't know if it actually means anything. Of course, what you're really looking for is less than 6.7 million shares. You've got an hour left for that volume. Not huge, but at the same time, you want to see that less than 6.7 million shares on Silver Wheaton today. Had a question in the den about Twitter. Could it go much lower? And the answer to it is, well, certainly could. The problem with Twitter is, if you think about shorting it or doing anything else, is the possibility of getting a real CEO in this company. And I think the odds are getting better, not worse, that you're going to get that announcement. And you're probably going to have a $4 or $5 run on a good CEO taking this job. You always have the possibility of Jack Dorsey taking it himself, and one of two or three very good CEOs taking that job. If they do, it could be a very have a short but very sharp upside to it, and I think it could take it back up to the $35 level. Of course, the longer it comes out, it could come down, but it's a headline-driven stock, and I don't know how to trade those since I don't know what the board and or Jack Dorsey's going to do himself. I just have to stay away from it. I wish once these things are out of the way, I think we're probably going to see this thing start to trade in a way that we can figure a lot more out for it. Other stocks of interest out there, we were talking about some of these Chinese stocks. And, of course, Solar Fund Holdings down a little bit today. Not a lot of stuff moving very strongly. This is actually starting to act like maybe it's got some support around this mid $5 level. But you know, there's a lot of stocks out here that I duly think that are either going out of business or going lower. But they are not acting like a lot of people are getting ready to throw these things out with the bathwater right now. They look like they could go higher before they go lower. This one, again, we've had sideways action since the 26th of last month, and nothing has really changed so far. You know, all those stocks out there. Let's take a quick look at Quaihu. Out here, see if there's anything else. You know, we've been talking about these, and that is getting spammed here. Okay. Well, let's just kill the email for the end of the show here. Got that March 10th low at $44.56, 9.2 million shares. You got into it. Didn't really break it with volume. So like I said, I can't say that the bottom is in for China, but them buying a lot of those big tankers over the weekend and trying to buy up a lot of crude down at low levels makes me think that at least they think that we're getting to some decent levels on crude, and maybe that puts a bottom in at least temporarily. Could be. Anyway. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Also cover when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.